Hi everyone. So today I think we'll be discussing what are the expectations for the upcoming budget and reflecting a little bit on what was done in the last budget and what we have seen through the year, right? So last year, I think the key provision that was brought in was in relation to taxation of virtual digital assets. And that topic remains as relevant as it did last year. In fact, more so in the context of India's G20 presidency this year. Now, India has been given the difficult task of leading the world into uh, taxing and regulation of crypto. And it's interesting to see what would come up in the current budget, considering that most of the countries around the world have actually chosen to regulate instead of banning or taxing crypto in a very punitive manner. The bulk of, I think, what the expectation around the current budget, given this backdrop, at least from my perspective, is, or hope rather, is that there are many aspects of taxing virtual digital assets which could help, which could be further clarified and to help the businesses actually implement this in practice. So the other thing to keep in mind also is that while during the last year we have seen a slump, a correction in the tech industry. There have been many layoffs. There has been a bit of a recession, larger macroeconomic conditions which have caused the economies to kind of struggle. Now, in that context, one shining star has been the Web3 industry, which continues to raise some amount of money and continues to come up with innovative products. And compared to the rest of the world, India is gifted in terms of its pool of talented developers who can actually come up with this new technology and help scale India's ambition in this space. Now, all of this hinges on what tax policy and signals the government is sending to this space. Because last year, I think the memorandum, the preamble to the provisions said that they wanted to contain they wanted to tax cryptocurrencies or virtual digital assets which are being highly traded. And RBI governor has many times said that all currencies are to be banned. So the approach to it was almost like treating it worse than gambling. And in that sense, there is a lot of scope, given that these cryptos and virtual digital assets are very intricately intertwined with the larger Web3 blockchain ecosystem and the potential that the technology shows and the promise it shows for the future. That is the context to the following set of budget expectations or hopes that I have. I think one starting off with is rate rationalization, which is 30% tax on all sales of virtual digital assets, along with no losses or carry forward, I think is an extremely high tax position. And this has given the wrong policy intent. It doesn't signify only that we want to tax these cryptocurrencies or the tokens. What it has led to over the last year, between the last budget and this budget, is a bulk of the companies actually resettling their domiciles or the companies abroad. And now value and innovation is being built outside the country. And this in turn is a loss of long-term revenue gains and capital gains, or employment opportunities, or even innovation. Innovative products are being now created and launched outside of India by Indians who are setting up companies and who are residing abroad. So to correct that, the correct policy signal would be to reduce the rate of taxation, allow for losses, reduce the 1% TDS that is currently being imposed on such transactions, and make it a 0.01%, which is similar to the securities transaction tax. And in addition to clarifying the scope of what is a virtual digital asset, I think some clarifications, useful clarifications came through last year, excluding loyalty points or reward points and the like. But there is still scope for a lot more items which could potentially be covered, which need to be excluded. There is also need for more clarity around other transactions in the space, such as staking and digitally backed NFTs. So digital asset backed NFTs, because for now only NFTs which are backed by a physical asset or tangible asset are not considered as covered under these. But at a policy level, there is no reason to distinguish between intangible and tangible assets. So to that extent, I think there is scope for rationalization there. And the last piece with respect to virtual digital assets is around valuation. So even today, while for exchanges to complete their compliance obligation and pay the TDS, there are some guidelines around valuation. With respect to regular transactions, there is still no clear valuation guidelines or rules such as what we see in Singapore and some of the other countries. So even if we want to tax it, I think that's a piece that the government can still propose something on. Now, moving on to a few other items, which I think apart from what other experts might be mentioning, I think a few I wanted to pick, which I thought could use a bit more attention in the upcoming budget. I'll start off with something completely different, maybe not so related to tax, but the social stock exchange. That was something that was announced a couple of years back. There have been some rules and regulations that have been notified, but we are yet to see any listing on the social stock exchange. And that is because of certain further amendments or changes that are required to the rules to make it functional. So considering this was mentioned in the Prime Minister's speech, in the Finance Minister's speech, earlier in the year. So I think there is 2 years back. So there is a lot more scope for something to be done around this space. Thirdly, I think another key area where there's been a lot of action has been around the gaming space and online gaming and the rate of tax that it is going to be subject to. So clarity around that, in addition to centralizing the regulations, which we have seen some draft regulations earlier in this year, I think would be a good signal for an upcoming industry which is generating a lot of revenue. So GST clarity around gaming is the ask. And lastly, I think a couple of legacy items which have been pending for a while, which include, standardized corporate taxation rates for manufacturing companies and companies in the service space. So we are asking for maybe 15% corporate tax rate for all sorts of companies, and also standardize it along with the corporate tax rates applicable for LLPs, so that all the companies or LLPs across all sectors benefit from this sort of a tax advantage. And the last item I'd like to bring up is 194O and the clarifications around that, because TDS has been imposed under 194O on online marketplace transactions or sale of goods or services for a while now, but there are still a lot of gaps and practical challenges in implementing it, which I think could use from clarification.